Hello, my name is Luke Bonham, and I'm going to give you a brief training on the IDA Income Calculator. This calculator was created by an IDA initiative work group that worked to inform the standard practices for determining whether someone is income eligible for an IDA. Calculating income can be different for each household and is based on a lot of different factors. So in calculating this information, we want to start by saying that first of all, it's the applicant's responsibility to provide full and accurate information to the provider. You will ensure that the information is comprehensive for the entire household to determine eligibility. Applicants all sign a certification statement that you see on this screen. And in the end, it's the applicant's responsibility to be truthful and your responsibility to get comprehensive information. This will often take trust and collaboration, and getting all this documentation can be challenging and time-consuming for both sides. When we say household, we're talking about all individuals who live together and share income and expenses, including parents, elders, children, or other dependents. If they answer yes to the 4 questions that are on the screen, that is a household for IDA eligibility. We do not require that IDA providers collect taxes to document household size, but if you do collect their taxes and the household size listed on their taxes is different than what they report for IDA eligibility, as part of your due diligence, you should document why those numbers are different. And if they are a foster youth applying for an IDA, they can be considered a household of 1 person. Now to the IDA household net worth limits. As an asset building program, we have a net worth limit of $20,000 that excludes the assets and debts of a primary home, 1 vehicle, and $120,000 in retirement savings. The net worth calculation is on the last tab of the income calculator, and it also calculates an outcome tracker. These are the fields that should be reported by the client and then inputted into the database, into outcome tracker. Participants self-report these amounts. It is not something we collect documentation to verify. For a net worth example, at the bottom, it'll auto-calculate the same way outcome tracker would calculate the IDA eligible net worth. In this example, the full net worth is $150,000. But when you exclude the assets and debts of the home and vehicle plus the retirement limit, which is what the calculations will do, the IDA eligible net worth drops to a negative $30,000. So let's move to income for the IDA, where you have 2 options. Either the applicant has been approved for a qualifying public benefit in the past 12 months, or you verify that the gross income of the applicant's household is at or below the limits for their county and household size. On the first tab of the income calculator, you'll fill out the name and the date of verification, answer the net worth question, number 1, and public benefits, which is question 2. For public benefits, if clients are receiving one of the public benefits listed, it means that they have already been screened for income and their income limits are at or below IDA limits. After you collect documentation for a qualifying benefit, you are done. No need to do any additional income verification. This would be a benefit award letter from within the last 12 months on letterhead or other official format, listing the applicant's name and date for when the letter was issued. It can't just be a copy of, say, a SNAP or a WIC card. That's what you save to show their income eligibility, and you're done. If not, then you use the IDA income limits to determine whether they're eligible. NP updates income charts by county each spring when HUD and HHS release updated numbers, which is usually in April. The income limits are then built into the income calculator and arranged by county, and a new income calculator is released. If an applicant is over income 1 year but qualifies after the new limits are updated, you need to make sure they requalify with an application date and income verification that happens after the new income numbers are updated. The income calculation is about forecasting the year ahead, not the past year. So the most recent 2 months, which is what you're required to provide, gives a snapshot of their future income. This is a summary of what is considered consistent income that should be included in income calculations. I won't go into it here, but it's important that you read through the income include versus exclude tab to get all the details of what to include and what to exclude for determining income eligibility. For example, there are detailed considerations for SSI, cash, full-time students, unemployment, and more. Copies of pay stubs are the preferred documentation. If pay stubs aren't available, bank statements or letters from the employer are acceptable with as much detail as possible. For tax returns, NP does not require nor recommend that individual income tax returns be collected and stored for every applicant, but rather only when you find it to be the best or only method for verifying income. Having filed income taxes is not a requirement for opening an IDA. Thus, it should not be presented as required. Tax returns can be used to document income if the most recent year accurately represents their current income, and a Schedule C is a common way to document small business income. Remember to protect personal identifying information, such as blacking out Social Security numbers or keeping only the relevant forms in digital or paper storage. Even if the client doesn't have consistent income, start with the consistent income tab because the county and household fields determine what income limit numbers are used. For each source of income, input the name of the person on the left, and from the source of income dropdown, select what type of income you are looking at. Next, look at the frequency received, which is based on documentation, not what the person says. This will inform your annual income calculation. Entering the pay period dates from the pay stubs will help show how often they are paid and will ensure that there are no gaps in pay. For example, you have to decide whether they are paid 2 times a month or every other week by looking at the pay period date range. If they land on the same days, both months, that's going to be 2 times per month. If they're exactly 2 weeks apart, that's biweekly, which means every 2 weeks. Determining that the small difference alone between biweekly and twice a month can make or break their income calculation. Income documentation needs to be for at least the most recent 8 weeks. So a weekly pay period would need 8 pay stubs, and twice a month or biweekly would need 4 pay stubs. And make sure to put the gross income listed on the documentation, not the net pay. All overtime income should be included for IDA income calculations when present on a pay stub, even when the applicant says that they do not receive overtime regularly. If overtime puts them above the income limits and overtime is not something they get regularly, you may decide to include more than 2 months of income to show income over a greater period of time, but it must always also include the most recent months. What should you do about gaps in documentation? There should be documentation for a full 2 months without gaps. If the applicant has regular income but received $0 for a pay period, it should be written in as $0 in the income calculator, but there needs to be a pay stub showing $0, a statement from the employer verifying that, or an explanation written and signed by the participant explaining the situation. If a participant with consistent income got laid off a month ago and has not received unemployment or another source of regular income, pay stubs should be provided for the month of income plus a signed statement or documentation showing that they continued with 0 income for the rest of the time period in question. Now on to the inconsistent or small business income. Here are some examples of what should be included. National data tells us that 1 in 5 households experiences income volatility, moderate to significant income fluctuations from month to month. And so we should be expecting to navigate inconsistent sources of income as well. Find the inconsistent and small business income tab. There are many boxes on this page that all feed onto the main calculation. Use a separate calculation box for each source of inconsistent income. You won't have to fill in each field, only those that are applicable. Let's look at small business income first. This one is the most straightforward. Number 1 on the source of income, list it as small business and then fill in number 8, which is the net annual small business income. Ideal documentation is a profit and loss statement for an existing small business. If you're a micro enterprise provider, you may need to support them with their profit and loss statements before applying. If they're providing taxes, it must be for the most recent tax year and represent their current situation accurately. Business losses will not carry forward to reduce total household income. On the same tab, if you're looking at year-round inconsistent income, Some sources of income that are earned at inconsistent intervals but are still year-round. For example, day laborer. In this example, you would use question 1 to 4 to describe the income, and question 5 to document lump sum amounts, and question 6 to identify how many whole months the payments represent. For example, if these 4 amounts were received over a 4-month time period, put 4 in the field. If they were all received in just 1 month, enter 1. Again, this is for inconsistent income that is year-round to arrive at a monthly average. Inconsistent income for seasonal work, like a summer swim instructor, you would skip question 5 and 6 and just use field 7 to record this income as a lump sum for the year. When all sources of income have been recorded, you will come back to the consistent income tab for a grand total calculation at the bottom. You can see here this applicant had 50,960 in consistent income, 10,120 in inconsistent income, for a grand total of $61,080. Based on their county and household size, they income qualify for the IDA. Everything in the income calculator should have documentation to accompany it, because you calculate based on the documentation, not what the participant tells you. NP looks at income documentation to confirm that we agree with your calculation. And that is it. You save this in an Excel format. Make sure you're always using the most up-to-date calculator to ensure that the income limits are accurate. Know that this process can be difficult and situations are all different. And if you aren't sure, ask for guidance. If someone increases their income or net worth after they're enrolled, it's okay. They can still stay in the IDA. This is all about their financial situation at enrollment. Thank you so much.